In terms of global cues, while markets may seem a bit jittery at higher levels, in fact, we've had the Dow as well as the S&P 500 break the 50-day moving average. I don't know how from a technical perspective, how much that is important because, we're still trending for Wall Street. I mean, we were just talking about how the Nasdaq made record highs in yesterday's session. FANG stocks continue to rule the roost. So, you have to take these bits, these technical adjustments and these news pieces with a pinch of salt. There's still activity in the dollar index. It's off its 11-month peak, but, I still think there's pent-up buying interest there. 10-year yields are still hovering around 2.9%. So the world is pretty much status quo overnight. But the big story I think the world is focused on is what happens with the very important OPEC meet over the weekend. And I just want to run some quotes at this juncture, just to put context to the discussion. And you have the Saudi energy minister saying that OPEC needs to make sure demand is met. We'll discuss how much oil needs to be released. I think the broad expectation going into that meeting is that there would be an output hike, which would support prices. In fact, keep prices very much capped between $70, $75 to a barrel, and that would be something that the markets will be focusing on squarely. Of course, we've also had the Iranian oil minister say, I don't think we can reach agreement. We firstly need to discuss and decide about the main issue inside OPEC. OPEC's decision is so important. After it, we should coordinate everything with the Russians. So I think there are dynamics at play. You have the OPEC nations and you have Iran, you have Russia. But as long as there is some sort of consensus drawn up in terms of extending out output, I think that should comfort the markets broadly. That's going to be the underlying aspect to focus on. In fact, let's go across. Let's keep it with the oil story. Vandana joins in with her perspective on what to expect from tomorrow's meet. Vandana, okay, so a hike maybe in the offing, but do you think that they would be able to make up for all of the demand that is there in the market, and that would be a big support for prices?
Okay, so good morning. Here's where the market consensus is sitting right now. As you rightly mentioned, it does seem increasingly like a production hike agreement will happen. That has been factored in despite Iran's opposition, and we can talk a little more about that. But here's the deal. The market has now moved from focusing, and this is just over the past 24 hours or so, it has moved from focusing on whether or not there will be a deal, the answer being yes, most likely there will be, to what is the actual amount of physical barrels that are likely to be added to the market as a result of this deal. So there's a sort of dichotomy that has started to emerge now between, in theory, or what they sign to versus what they're physically capable of putting into the market. And as this has been, quite widely discussed and well known by now, several OPEC member countries and a few non-OPEC member countries are just simply unable to. They have all kinds of constraints, ranging from just physical problems in the field to all sorts of attacks from as we see in Libya and Nigeria, militant attacks and so on. So how much according to analysts and several OPEC delegates who were privately talking to the media yesterday as well, it appears that the actual increase might end up being closer to 600 or 700,000 barrels per day, as opposed to even if they sign to a 1 million barrel per day figure. And that is what is sending crude prices higher again this morning.
Vandana, there would be a elasticity point beyond which crude prices, they will start hurting demand. What is that sweet spot where OPEC is happy, non-OPEC members are happy, and demand also is not getting hampered?
So there is no concrete evidence right now, in terms of data, to suggest that demand is falling, demand growth is easing as a result of high oil prices. Now, it's China is expected, which has been the biggest contributor to demand growth for the past decade, is slowing down but that's not because of prices. It's more because just the economy is pivoting away from manufacturing and so on. In India, it's holding up reasonably strongly. So there is a fair amount of debate whether demand is actually crunching. But that's also because across the world, especially in emerging countries, we see governments starting to step in with all sorts of measures, freezing prices. We've seen that happen in Brazil after the trucker strike last month. In other parts of the world as well. We've seen that in Malaysia, Indonesia, the government's starting to backpedal a little bit. So they have been easing the pressure. In India, again, I know there's a fair amount of discussion around should the government maybe reduce the taxes. So some of these steps are also going to delay, whatever effect we could have expected to see. A dampening of demand growth seems to be, not very obvious right now.
Vandana, do you sense that, there could be an escalated reaction post the OPEC meet? Because, as we understand, going by the latest comments, Iran is hinting at a compromise. Would that make a material difference so much enough that crude could perhaps peg back all the way to 70? Or do you think this range-bound movement of crude, 75 to 80 odd, would continue for some more time?
So I think we should break that up into very, very short term today and the next few days versus, the next few weeks. And look, the market is on pins and needles, understandably, because that whole range of, zero, no deal, which is a zero increase, to all the way to 1.5 million barrels per day that Russia has been proposing. It still looks, it's quite still up in the air, even if you assume that the 1 million barrels per day is a consensus, and that seems to be what an OPEC committee meeting on Thursday agreed to recommend to the ministers today. So formally, that is the proposal that's going to be tabled, a 1 million barrel per day increase. But as I mentioned again, what is the actual increase? The market is going to take its time to determine exactly how much of that would be. And again, to the point you made in your question earlier, is there a possibility that there's no deal at all? It appears slim to me, very slim to me, but it cannot be ruled out. So again, because Iran is apparently the Iranian oil minister was invited to this committee meeting yesterday and stormed out. I suppose in protest and disagreement with its recommendation for a 1 million barrel per day increase. So there's a lot of drama, obviously a lot of disputes and disagreements still. I expect the prices to be highly volatile in the coming hours, and possibly even after the OPEC decision, as the market digests the implications of what exactly will be the difference in the physical markets. But going out again, the next few weeks, I think if the actual increase is closer to 600-700, even 800,000 barrels per day, I think the market is going to remain quite tight. We have, plummeting production in Venezuela. We have Libya. We have half of Libyan production has been shut in since last weekend. And then, of course, we have the U.S. sanctions against Iran. So, going forward, I see quite a tight market as we go into Q4, which means definitely a floor at 70, I would say, and possible breaks towards 80 again.
Right, Vandana, thanks for joining us and giving your inputs on what exactly would happen to crude oil prices, looking at what would be the outcome and when that outcome would be implemented. That is also very important to understand.